Inflation is an economic phenomenon where the general price level of goods and services rises over time, leading to a decrease in purchasing power. During periods of high inflation, investors face the challenge of preserving the real value of their wealth. Traditional investments may not keep pace with rising prices, making it essential to identify alternative strategies to safeguard and potentially grow your assets. In this video, we will explore the best investment options for when inflation is high, helping you navigate uncertain economic times and protect your financial future. Section 1. Understanding high inflation. The impact of inflation on investments. High inflation erodes the purchasing power of money, which can adversely affect various investment types. Fixed income securities like bonds may experience diminishing returns, while cash and cash equivalent investments may lose value in real terms. Investors need to adopt inflation hedging strategies to protect their wealth during periods of rising prices. Causes of high inflation. High inflation can be caused by several factors, including excessive money supply. When central banks print more money, it can lead to an oversupply of currency, driving up prices. Rising production costs. Increased costs of raw materials, labor, or energy can be passed on to consumers, resulting in higher prices for goods and services. Demand pull inflation. When demand for goods and services outstrips supply, prices rise due to increased consumer spending. Best investments for high inflation. Equities, stocks. Stocks have historically been one of the best inflation hedges. Companies can increase prices for their products and services to keep up with rising costs, leading to potential revenue and profit growth. Investing in well-established companies with a history of strong performance and stable dividends can provide a hedge against inflation and potentially deliver above-average returns. Real assets. Real assets, such as real estate, commodities, and infrastructure, tend to perform well during inflationary periods. These assets have intrinsic value and often rise in price along with inflation. Real estate investments can provide rental income and appreciation potential, while commodities like gold and oil are tangible assets that tend to retain value in times of economic uncertainty. Treasury inflation-protected securities, TIPS. TIPS are a type of U.S. Treasury bond specifically designed to protect investors from inflation. Their principal value adjusts based on changes in the Consumer Price Index, CPI, ensuring that the investment keeps pace with inflation. TIPS provide a fixed interest rate, and the semi-annual interest payments increase with inflation-adjusted principal value. High-yield corporate bonds. While traditional bonds may suffer during high inflation, high-yield corporate bonds, also known as junk bonds, can offer higher yields to compensate for increased risk. These bonds are issued by companies with lower credit ratings but offer higher interest rates to attract investors. Investing in a diversified portfolio of high-yield bonds can provide potential income and protection against inflation. Energy and natural resources stocks. Energy and natural resources companies often benefit from rising commodity prices during inflationary periods. As demand for energy and raw materials increases, the revenues and profits of these companies may grow. Investing in energy-related stocks or exchange-traded funds, ETFs, can offer exposure to this sector. Diversification and risk management. Diversification remains a key principle of successful investing, especially during periods of high inflation. By spreading your investments across different asset classes, industries, and geographic regions, you can reduce the impact of individual asset volatility on your overall portfolio. While inflation hedges can protect your investments to some extent, it's essential to manage risk effectively. Consider working with a financial advisor to develop a risk management strategy tailored to your financial goals and risk tolerance. Section 4. The role of professional guidance. Seeking professional advice. Navigating high inflation and identifying suitable investment opportunities can be challenging. Working with a qualified financial advisor can provide valuable insights, personalized strategies, and ongoing portfolio management to help you make informed decisions. Conclusion. During periods of high inflation, preserving and growing your wealth becomes paramount. By understanding the impact of inflation on investments and diversifying your portfolio with inflation hedging assets such as equities, real assets, TIPS, high-yield corporate bonds, and energy stocks, you can better protect your financial future. Remember that each investor's situation is unique, and there is no one-size-fits-all approach. Evaluate your financial goals, risk tolerance, and time horizon before making any investment decisions. Seeking professional advice from a financial advisor can significantly contribute to achieving your long-term financial objectives in an inflationary environment.